Welcome. Thank you for joining us for today's webinar on green banks and how we're unlocking climate and clean energy finance through collaborations and partnerships. My name is Chris Castro. I serve as the Chief Sustainability Officer here at Climate First Bank. And I'm really excited to be hosting today's conversation because we really believe something that's simple yet very powerful. There is no single institution that can solve the climate crisis alone. But together, we can scale solutions faster than any of us can on our own. And that's what we plan to share more about today. At Climate First Bank, we're often referred to as a green bank because, of course, climate is in our name and our focus is sustainability. But green banks are actually a distinct and rapidly growing ecosystem of mission-driven financial institutions. Often they're non-depository, and they are designed really to address key market gaps in our communities, especially where traditional finance either falls short or is unable to go. Green banks exist to unlock private capital from projects, reduce risk of defaults, improve the affordability of investments, and even expand access to clean energy, to resilience, and to climate positive solutions for families and for businesses. And I think particularly focused on underserved communities. Today, I'm especially excited because we are joined by leaders who are literally shaping the movement both nationally and locally, including Rokas Baraniovas from Montgomery County Green Bank, Amir Kirkwood with the Justice Climate Fund, and Dan Adler with the US Green Bank 50 Coalition. Each one of these leaders and organizations brings a really unique perspective on how capital can be structured to accelerate clean energy, resilience, and equity outcomes. So with that, I wanted to say a big welcome and thanks to each one of you. I really appreciate you taking the time to share some of these insights in advance. And really to get us started, I think we should turn it over to you to share a bit about a brief introduction on yourself, especially a point about your background that kind of led you to this Green Bank movement. And Amir, I'll turn it over to you to get us kicked off.
Great. Thank you so much, Chris, and appreciate the opportunity to share today with the audience. My name is Amir Kirkwood. I'm the CEO of the Justice Climate Fund. The Justice Climate Fund was formed in 2023 for the express purpose of helping community development financial institutions, minority depository institutions, and green banks to scale their investments in clean energy at a local level. We work with institutional investors, philanthropies, and commercial lenders to identify financing solutions that we can then partner with green banks and other financial institutions to deliver products to both residential and commercial landlords, property owners, small businesses, and nonprofit and faith institutions.
Wonderful. Rokas, over to you.
Thank you, Chris. It's great to be here with everyone today. My name is Rokas Baraniovas, and I lead partnerships and business development at Montgomery County Green Bank in Maryland. I have been with the Green Bank now for almost 5 years. Before that, I spent about 15 years in commercial banking, working for local, national, and international banks. After many years in conventional banking, I started feeling a bit burned out from the traditional model and wanted to move into something more mission-driven. I have always been involved with nonprofits and community organizations, so the idea of mission finance really resonated with me, and that's what ultimately brought me into a green banking world. At Montgomery County Green Bank, my focus primarily is on building partnerships with financial institutions, developers, and capital providers, so we can bring more private capital into renewable energy and climate-related projects. And outside of my day job, I also try to stay connected to the broader community and industry. I serve on the board of the Bethesda Chamber of Commerce and on the Montgomery County Building Improvement Board, which helps me to stay connected to what's happening on the ground in our local building and business communities as well. So for me, green banking sits at a really interesting intersection where finance, public policy, and climate solutions all meet, and it's exciting to be part of building financial ecosystem that can actually scale those solutions.
Love that. Thank you, Rokas. That was a really helpful understanding of the intersections of green banks. So really neat. Dan, turn it over to you, see if you're available.
I am. Thank you so much, Chris. Thanks for the opportunity to be with you here today, and I look forward to being on camera very shortly. I'm Dan Adler, Executive Director with the U.S. Green Bank 50. We were formed in 2024 to represent the voice of this emerging sector, especially finance project lenders and community groups that are seeking to drive more capital into climate and clean energy solutions. My Green Bank story goes back several decades now. I've had a couple of different operating roles in Green Banks in various descriptions. I've been in and out of government service, but particularly my time in venture capital, where we were out here in California promoting a great deal of climate innovation that would very predictably have a surge of activity in the early innovation cycle and equity formation, and then run aground in the valley of death when it was time to deploy. And it was the absence of a focused credit strategy that could help bridge from innovation to infrastructure that led many of us to think about green banks as a specialist approach to driving technologies to scale. And that's really the name of the game now, is taking the innovation we have that we know that can work and not only scaling it in established markets, but making sure it works for communities and industries and customers that are underserved at the moment. So that's the Green Bank mission, and I'm excited to tell you more about it in the course of the session.
Love it. Taking innovation and impact to scale. That is certainly a big part of how green banks are helping to catalyze what's happening across the country. And I love the diversity of the backgrounds. I mean, I come from also government work and nonprofit sector. Certainly haven't been a banker my whole life, but now as an executive at Climate First Bank, I'm bringing a unique aspect to, I think, the banking and finance world. And I really appreciate everybody who I meet, has a different perspective and comes from a different background in this space. So it's really cool to hear. Dan, if I can, I'd love to turn it back over to you really quickly. I provided a high level of what green banks are and what they do in my introduction, but really, as the leader of the coalition of a bunch of these green bank members, it'd be helpful to demystify that a bit further, and help us understand what distinguishes a green bank from a traditional lender like Climate First Bank. What are some of the core barriers or market failures that you're trying to address with this new institution, and kind of take it from there. Help us explain what, kind of hearing it for the first time, how you would do that.
Yeah, happy to do that. And we always check ourselves because the language gets quite technical, and we are obviously embedded in financial ecosystems and relationships. And we got to tell the story cleanly, particularly in a moment like this. But I think the shortest version is that green banks are specialized financial institutions. They're not depository. They're focused on advancing clean energy, and they use a range of different financing tools in order to achieve that. They deploy clean energy and energy efficiency and increasingly climate resiliency. There's an emphasis, as I said at the beginning, on serving underserved customers, folks that have maybe a questionable credit history or an absence of credit history, or just not the place where established lenders and investors are seeing the immediate economic opportunity for climate solutions. But we know we need to deploy there. So we are sort of the advanced team thinking about project dynamics, thinking about early capital, thinking about a set of technical assistance provision that we can bring to bear that will systematically de-risk these investment opportunities. Again, principally focused on proven technology at this stage, but the thesis being, as proven technology is commercialized and brought to scale, that makes it easier for the next innovations to follow a similar path. So it's lessening will be a gap for key sectors throughout time, but we think that with the discrete allocation of this public-private partnership capital for early stage pre-development work, for technical assistance to get projects off the ground, and working closely with communities to do so. And then the ultimate goal of standardizing and de-risking helps the normal capital markets find their foot in these bridge.
Getting a bit of a cutout there, Dan, on your signal, but that was really helpful to kind of hear in terms of how you're doing it. We're hearing some comments. They're traditionally not-for-profit institutions for sure, and they tend to really focus on kind of proven technologies, but would love for either Amir or Rokas to add any additional value to kind of how we go about defining green banks from your perspective.
Yeah, so I think for me, what's been exciting about watching the green bank movement is that the adaptability of the model. There are green banks, obviously, like Climate First Bank, which are true depositories. There's green banks that are crossovers that are also community development financial institutions. There are ones that are quasi-public, as Dan indicated earlier. So what's really been exciting, similar to how Montgomery County Green Bank was formed. And what's been exciting to me is that because of that flexibility of the structure of each green bank and how they're formed, they're able to work with communities in a very unique way. they're also able to work with investors in very diverse ways. It's very like the idea that a model could do everything from issue bonds to regrant, philanthropic capital. It's really exciting because that means that you can meet the community where it's at and really sort of build capital stacks in a way that are aligned with what is affordable in that community, what's achievable, uh, but then also drive really deep impact stories back to investors that make them want to continue to be engaged with the field.
I was just saying that it's helpful to hear that these are being lifted up and created in kind of different ways, whether they're quasi-governmental, they're being lifted up by not-for-profit organizations, even some private institutions like us that are trying to kind of bring that level of catalyst to the market. So very helpful. Rokas, I want to turn it over to you to help us learn a little bit more about Montgomery County Green Bank, because I think the inception story is unique. And there's a lot of communities, state governments, regions that are looking for ways to create a similar type of entity that could be a attractor of private capital that can help catalyze investment in their communities. And I think that what Montgomery County Green Bank has done to me is a model that I hope to see replicated all over the country. So help us learn how this came about at a high level and what might others kind of think about as they're exploring this model too.
Thanks, Chris. How much time do we have? Before I get into the Green Bank story, let me say a quick word about Montgomery County for those who may not know it or be familiar with it. So Montgomery County, as we call it, MoCo, is a suburb of Washington, D.C., and we have just over 1 million residents. And it's one of the largest county economies in the region. And we consistently ranked among the most educated and the most diverse counties in the country. I have personally been lucky to call Montgomery County home for about 20 years now, so I'm a very proud resident. Montgomery County adopted a climate action plan with ambitious targets, reducing greenhouse gas emissions by 50% by 2027 and reaching net zero by 2035. And they did that about a decade ago. And the county recognized early on that the policy alone wouldn't get us there. A big part of the solution had to come from buildings and infrastructure, and that requires capital. Around that time, the county received about $20 million from Pepco Exelon merger settlement, which were two utility companies in our county. And leadership had a choice, is either to distribute it as one-time grants or create something that could recycle the capital over and over again. And the county chose the second path and created the Montgomery County Green Bank. It's set up as an independent 501c3 public-private entity with a mission to help the county achieve those climate goals. And we started by using that capital strategically, like small loans, credit enhancements, loan loss reserves, all designed to unlock much larger amounts of private investment. And a few years later, the county doubled down by dedicating 10% of its energy fuel tax revenue to the Green Bank. And that's roughly $20 million per year, which kind of gave us a real dry powder to scale and leverage private capital much more effectively. But financing alone isn't enough. Like many jurisdictions, Montgomery County adopted building energy performance standards, which require buildings to meet certain efficiency targets over time. And our role is to help property owners succeed in that transition. Not just by, not only with the financing, but with also with the technical assistance, which is very important. And over the past 4 years, our technical assistance program at Montgomery County Green Bank grew from just a couple $100,000 to nearly $2 million today. And it helps property owners get started, whether that's benchmarking, energy audits, electrification studies, or planning EV infrastructure for multifamily properties. And those early stage studies are critical because they translate into real real financeable projects. So to support that, we work with about 36 pre-qualified climate-focused engineers and contractors who also understand how to layer in incentives, whether from utilities, state, federal, or even local programs. And when you combine those incentives with our financing, many projects suddenly become feasible. And in some cases, they even cash flow neutral or positive because energy savings offsets the financing cost. That is where we differ from traditional lenders. They tend to look narrowly at risk. We look at like full picture savings, incentives, operational improvements, and kind of like a long-term asset value. And the results speak for themselves. Over the past 4 years, we have grown from just a few $1 million in project activity to nearly 350 million, while our team grew from 5 people to 15 people today. And today, the Green Bank is really one of the engines behind the county's climate strategy, helping turn those ambitious goals into real projects on the ground. And I can talk about this for another hour if you want.
I believe you can. I'm sure that you can. And I think that there's a couple of really important takeaways. There are literally thousands of communities across the country that have moved forward with a sustainability or a climate action plan, but often get stuck at implementation. And what you have just described is a strategy that Montgomery County advanced to meaningfully move the needle, to attract private capital, to help give resources to your residents and your businesses, to help move along that journey. I love the BEPS law tie-in, how you all, passed the benchmarking law, and this fund became a tool for those building owners to make improvements and achieve the compliance of the law. I also love how it came about. There are utility franchise negotiations that are happening all the time across this country. There are utility mergers that are happening, and those might be really critical points at which local governments and communities can kind of get in there, interject this idea, and potentially carve out funds to kick off a green bank. And lastly, I love the aspect of technical assistance. Most of the times people think green bank and it's just giving out money or doing some type of incentive or credit enhancement. But the TA aspect, what I'm hearing, is absolutely essential for Project Pipeline. You all are out there helping building owners navigate. And then once they identify what to do, then they're like, all right, how do I finance it? And you all are playing that connector. So it's really powerful. Amir, I think it's important to also highlight Justice Climate Fund. We'd love to hear a quick inception story on JCF as well at the national level.
Sure, absolutely. And so with JCF, when we were founded in 2023, it was the sort of the coming together of a number of representative organizations for CDFIs and also green lenders, developers, installers, who are all seeking to ensure that that the effort around financing and technical assistance for clean energy lending made its way to low-income and distressed communities. It was also formed with the intent of applying for funding under the Inflation Reduction Act to get funding under the Greenhouse Gas Reduction Fund, which we were able to do to the tune of just shy of $1 billion. While that whole effort is in a lot of litigation and suspension right now, JCF still realized that there was a host of pipeline being created across the country for projects that would address energy affordability at the residential level, small business level, working with nonprofits, other institutional partners. So we stayed focused on how do we again attract private capital to support the existing pipeline and the unknown pipeline that existed, or the unknown pipeline of potential projects. And, just kind of going into the whole concept of energy affordability, uh, as we all know, what happens is that there's often a disconnection between where energy prices are in sort of the spot market or the short market and the realities of people's incomes and what they can afford. We just experienced a period of time here on the East Coast and in the Southeast where there was extreme weather that has dramatically affected people's energy bills. And those energy bills don't discriminate between whether you're low income or whether you're upper income. They just increase. The difference is that often households where you are, middle to upper middle class and more, you are homeowners. You're able to tap HELOCs to add solar improvements, heat pumps, battery generators, whatever things you can to your home to help sort of mitigate the cost expense of energy. When it comes to low income and distressed communities, a lot of rural communities, native communities, that level of ownership and asset ownership doesn't exist. And therefore, the question becomes, how do you mitigate against the risk of increased energy costs in those markets? And so one of the things JCF does is work with green banks, work with CDFIs to define strategies to uh, bring those energy saving solutions so that they're accessible by low to moderate income communities as well. Uh, and so that's a big part of what we do. And ultimately, where that plays itself out in financing are things like credit enhancements, loan loss reserves, interest rate buy downs, trying to define interesting partnerships amongst different lenders. Because at the end of the day, the cost is the cost of development. The cost of installation is what it's gonna be. What you have to do is figure out what are the incentives we can put in place that enable those projects to move forward.
Love it, Amir. Thank you. And we'll get into some, I think, later on in this conversation, some examples of how that is coming together. But your point is really important around energy inequity and the affordability, issue and the disproportionate impacts of energy burden on lower and moderate income communities. It is evident. And when I was in Orlando and doing a look at the entire city, we use a tool called GreenLink Analytics to map essentially the entire community down to the census block. And we were seeing major discrepancies in communities of color regarding the amount of energy per square foot that they were spending, the amount of money per month that they were spending out of their pocketbook versus more affluent communities. So it is important. And the other thing that people don't realize is traditional banks like Climate First, we have a very strict regulatory compliance window that we have to be in, right? The regulators are looking at how risky we're being with the deposit capital that we're lending. That's ultimately how banks work, right? And ultimately, we have to stay in a very tight box. And in order for us to get out of that box and maximize the impact, especially those communities that need it most, it's these types of partnerships that help us do that. Those types of enhancement tools open up the credit box for our bank and allow us to get and access that financing for people that might not meet our minimum FICO as an example or whatnot. So this is super powerful. And love that. Dan, I want to turn it back over to you. You're managing this network of green banks, and I'm sure you're probably hearing challenges, but also success stories of your members and how they're using their institution to drive impact. I'd love for you to kind of shed light on either a flagship project or a member within the GB50 that you want to spotlight that is kind of really moving the needle and what they're doing different compared to others.
Yeah, thank you for that. And let me just tell a little bit more of the total story of the footprint of the green bank network that did not do at
Please.
the very beginning. At this stage, there are green banks touching 47 states, District of Columbia, and Puerto Rico, and we're closing the map. We're going to get to 50. They have different forms, and as we discussed earlier, some are nonprofits, some are publicly aligned, but I think we'll get to this a little bit later, how they can be brought into being. Some are adjacent to existing infrastructure authorities, some are adjacent to energy authorities, some are just full-blossoming nonprofits, or maybe attached to a financial institution. So they take a variety of forms, but they're all aligning on a similar mission, which Chris, as you actually described, bridging that gap to even the most mission-aligned traditional lender. There are things that don't fit in the credit box, but they need to be de-risked. So there's a full set of tools utilizing incentives better, speeding the permitting process, accelerating deployment, and sort of a blended spring that green banks are using across the country. It is all driving towards, at this moment in particular, affordability. And just one other element to note there's affordability at the household or firm level where these measures are deployed can save energy, but there's also demonstrating that the clean energy suite, particularly at smaller scale distributed solutions, if they are standardized at scale, can become part of the planning and themselves drive greater affordability because EPR distributed energy resources are not typically included in the macro planning for energy provision. So we miss the benefit of their inherent savings and efficiency. We need to scale them up and standardize them in order to get there. Part of what green banks do and their policy work is to try and drive it down. But to your question about where some of the most exciting examples are, in a membership of now 50 plus, I'm a pains to not pick one and then offend others. So I could just say Montgomery County is our star student, but we've already heard a little bit about them. But there's a consolidation and activity in the built environment. And so I would highlight a particularly interesting initial example from our colleagues in Nevada, which is a coastal state and has demonstrated great leadership and entrepreneurialism. The Nevada Clean Energy Fund bundled together multiple low-income single-family households and developed a term loan in partnership with a network of contractors, which they pre-vetted and did the early standardization work, and then connected across the country to another member of our network, the Solar Energy Loan Fund, Florida, which is also a CDFI and has capital. And so it's this organic combination of an origination function in a state, an attachment to the contractor community, great touch with the customers, whatever description, and increasingly, as I said, they focus on low-income and single and multifamily affordable housing, and then reaching across within the network to who has capital and underwriting and servicing capacity. And so all the things that we were driving to build downstream from the federal capital infusion that is now on hold, we're building anyway because the network has that capacity and there's certainly enough demand. But it takes that entrepreneurial energy and it takes a real deep local connection that Nevada has, that Montgomery has, that our colleagues really across the country in Michigan, in Utah, there's just really compelling stories. Starting small, starting with smaller scale projects because that's the capital gap, but thinking deliberately about how they aggregate and de-risk into something that feels like a traditional financial product that then capital markets at scale can support into the future.
And a quick add on, Dan. So GB50 as this kind of coalition partner for Nevada and their members, you all are kind of coming in to help them structure these types of partnerships, help them to identify different type of product sets, and ultimately support them as they try to thrive in their marketplace. Is that accurate? What else might you say that you support them with?
So the diversity of the banks and the members is quite broad. Some are very well established and don't need technical assistance advice. They might need deal flow. They might need access to top level capital, sort of the takeout financing once they've built a book of loan for liquidity and recycling. So we're working on the capital facing side of the equation. For some of the more nascent green banks or even some of the established that are moving into a new sector, we can help bring established practices on underwriting and origination from a market where that market segment has been unlocked and help our local partners translate that to their local conditions, be it a utility difference or regulatory or local permitting difference. So it's a great, we have an online shared services hub that we provide to our members where folks just populate with an issue they're facing in the deal context, and then we can source solutions from within the network or outside. So it's quite diverse, but it's a combination of capital access, technical assistance, origination strategies, and then in partnerships with JCF, we're working on sort of a macro scale credit enhancement facility to make some of these harder deals get closer to market. So a little bit of green bank money with a guarantee of some significant amount, but targeted, can unlock the true scale capital, which is 4 or 5x leverage in the model.
That was a great example, Dan, in Nevada. I mean, I think it goes back to our partnerships, which is our next kind of real point here. But these local institutions, whether they're CDFIs or MDIs or kind of up and coming green banks, they have their ear to the ground. They are connected closest to the most qualified contractors, and they're building those networks up. And that's where private capital and other sources, like what Self is bringing, can then bring to the table and be able to leverage ultimately in order to drive origination and drive lending in a more affordable and accessible way. So I love that example. And this leads me right into partnerships. We've been talking about a couple of examples of how things are maximizing. And Rokas, I'd love to turn it over to you to talk about a partnership with an institution. Maybe it's with Climate First Bank in terms of how we've been collaborating with solar lending, as well as would love to hear from others about other partners that you're looking to bring to the table. There's philanthropy and other catalytic capital funds that are out there that are trying to think about how to best use their funds in this moment and really maximize. And might green banks be an outlet? And how are you seeing those partnerships come together? I would love to kind of touch on those various things. So Rokas, we'll start with you, and then Sure. I'd love to hear from each one of you actually on this topic of partnerships.
Yeah, thanks, Chris. Partnerships are really the core of how green banks operate. One of our primary missions is to leverage capital. In other words, we try to use relatively small amounts of that catalytic capital you mentioned to attract much larger amounts of private investment. And to do that, we partner with community banks, regional banks, credit unions, CDFIs, as others mentioned, other nonprofits, and even national banks. And one partnership I'm particularly proud of, it is with the Climate First Bank, because Montgomery County Green Bank cannot originate directly or cannot do direct loans to the consumers. So what we did, we designed a structure where Climate First Bank originates and underwrites the loans to homeowners. And the Green Bank then buys down the interest rate using our capital. And that allowed us to bring consumer loan rates down from market rates of 6, 7. Can't believe I said that. To around 2 and 5%, right? Between 2 and 5. The initial pilot focused on homeowners installing solar, battery storage, and new roofs, since many people and solar add solar when replacing their roofs, just because it makes sense. And the results were extremely strong. There were 30-year loans with no dealer fees, and those interest rates, the program became very attractive for homeowners. And because the pilot was so successful, we expanded it this year to include like a broader energy efficiency upgrades, such as insulation, new windows, HVAC upgrades, and electrification. And in fact, the press release announcing this expanded program just went out yesterday. If people want to check it out, this program addresses like real barriers in Montgomery County. Many residents live in common ownership communities. Montgomery County is very heavy with the condo associations, because a lot of people live in Montgomery County and then they commute to the District of Columbia to the office. We're replacing windows alone in one condo unit can cost from $15,000 to $30,000. And most homeowners just simply don't have access to affordable financing for that kind of improvement. And when we can bring borrowing costs down significantly, those upgrades suddenly become realistic for homeowners. And that's exactly the role green banks play and should play.
Excellent. So basically expanding the ability of lending a new product in the county, right? Because ultimately you weren't able to lend directly to residents, and through this public-private partnership, now you're offering more tools to that community to help them make those investments, which I think is fantastic. Amir, let's hear from you an example of partnership that you think is really a good through line.
All right, I'd like to give actually a couple of examples, but before I do, I want to respond to sort of following on one of the comments by Rokas, and I've noticed in some of the comments and questions in the chat, one really critical thing to understand is that we all three of us, at different sort of seats within the ecosystem. And a lot of the questions I'm noting are very specific questions around third-party ownership models of leases and other very sort of detailed deal level structural things. While we will engage each of us in different parts of the individual deals, we're also sitting in a seat where we're really trying to facilitate growing the field as well. So I don't want you to think that we're not being specific because we're trying to intentionally avoid the questions, but part of what we're really trying to do is make sure you understand Climate First Bank, Montgomery County Green Bank, U.S. Green Bank 50, JCF have a huge part of our role is to bring other folks along as well and make sure that they are also being engaged in financing. And often because they have very direct relationships within communities, and they're the ones who have the trust and credibility with local government or local community or local businesses and others. So it's important that we play that role as well. And that specifically leads to two of the examples where, for us, they really combine the ability to bring green banks, CDFIs, and local government and local funders together. Example number one is in the state of Michigan. JCF was recently awarded a contract to help build out an elective pay program in the state of Michigan. And our entire model is driven by how do we help accelerate the ability for community lenders in the state to drive that those individual transactions. So it might be a green bank like Michigan Saves in Michigan, or it might be a CDFI in Michigan like Northern Initiatives or others, who are actually going to be the ones doing the transaction level work. But what we're doing is helping to blend out the state funding and private funding and really utilize those partnerships on the ground to drive those transactions. So again, that's one example of partnerships. The other one, again, also brings together those same constellation of partners. And we recently signed an agreement with the High Fund for Climate and Gender Justice, which is based out of Raleigh, North Carolina, that does a lot of work across the Southeast to advance clean energy and climate strategies, particularly in low-income communities. But they work greatly with green banks in those markets. So Invest New Orleans and Green Bank of the Carolinas, Freedman's Bank in Georgia. The idea is that we would help them to build a credit enhancement tool that would support the work of those green banks and other CDFIs across the Southeast to drive their strategies. And the critical piece we're helping with is raising the capital and helping to structure the credit enhancement vehicle. So those are two examples. Dan mentioned earlier that we're also working directly with the U.S. Green Bank 50 to develop a similar approach that covers the full national market of green banks. And again, it's all driven by the same thing that, together the collective capital we can bring along with the local expertise of those green banks is the right partnership to ensure not just the deals are getting done, but honestly, as the challenging environment where we're doing deals is happening, the sort of changes in federal policy, having to get deals done while the ITCs are still around versus once, the sunset happens. The answers to those are only going to come from these partnerships we create where we can start to see best practices. There may be a green bank that's doing something in California that Rocus and Montgomery County can give advice to them to say, hey, this is how you might want to think about doing this. And then US Green Bank 50 might be able to identify a funding source that helps to support the ability to do that. So this is the driver behind why we're really looking at the partnerships the way that we all do.
Maybe I'll jump in with my version of the answer to the partnerships question. And there's a few additionally to highlight since you mentioned philanthropy. We are finding a lot of interest in philanthropy, both in supporting the mission of GB50, but also down at the level of bank operation for a few reasons that are obvious that we're dwelling on. This is an era to deploy. We might not be able to advance policy, but we know we can build, and we have a certain window to do so under federal tax rules, et cetera. But we have a lot of, frankly, wind at our back, independent of federal subsidy. This is just the way to build power for philanthropy and climate resiliency to the solution for the break of air. Philanthropy notices that. And they love the notion that it can be actually leveraged. It's not a one-time grant. It can create durable, sustainable businesses at the green bank level. And you get just multiplication over time. And then you add it to private leverage on top, just as an impact thesis that we've been suggesting for a long time. We can now point to the result for donors. And they see the value and continue to do what they need to do on the policy level as well. Another key partnership is the large-scale capital community, I would say, the folks that know how to bundle smaller deal types and take them to secondary markets and replenish our coffers. I'm amazed by, I just saw this stat, one cell phone company does $34 billion of securitizations off its own customer book in a year. And they just made that machinery where, we all finance our cell phones that way, and they just keeps going. We maybe don't need a new cell phone every year, but the point is that goes to a secondary market, and then they do it again. And we need that kind of mechanism on our side. And then the last partnership is really the local elements. And Amir highlighted the CDFI partnership. It's natural synergy where maybe the green banks as originators don't have the balance sheet, but they have the deal flow, they have the local relationships, and it's a natural partner with a local aligned lender to marry the two. They have capital, they have a new mandate, maybe they don't know the sectors as well. So that's one that we think would really take us to a significant scale. And you have to think like a contractor, you have to think like a project developer. That's hard work, and you have to get in there and understand the challenges they face with a local permitting board or a local utility, and just decrease those sales cycle frictions where you can. And that takes a supportive type of pre-development money that is hard to find, extremely valuable even in small quantities.
Exactly. I mean, we're seeing that firsthand at Climate First Bank. One of the things that I've been doing is trying to establish more partnerships across the country with your members. And that exact kind of idea of the ability of helping to get origination through their local network and provide some capital on their behalf, But to your point about securitization, as a bank, I mean, we'll end up hitting either a concentration threshold risk or some type of liquidity need, and that's where, to your point, setting up those pathways so that we can create these partnerships and really recycle that cash is absolutely essential. You know, thus far since we launched our solar lending, we've done close to 450 million in lending across 9,000 plus households, and we're getting to a point where if we continue on this trajectory within the next year, we're going to need to figure out a way to kind of get some of that offloaded and sold to smaller CDFIs and MDIs. And what we're interested and excited about is that helps build the balance sheet for some of these other institutions, right? They can start collecting the principal and interest revenue and building out their green lending muscle and helping to bring more of this low cost private capital to the markets. Because quite frankly, the last 2 decades of doing this work has been really fueled by private equity. Very high cost capital, requires higher yields, requires a lot of fees. And really, when it comes down to it, what we could do to get out of the need of government incentive to make all of this pencil is really empower community institutions to be comfortable with the technology and the infrastructure to bring that private capital to their markets at a scale we haven't seen, turn billions into trillions, right, to meet the moment, as we like to say. So that was all super helpful. I know we have about 15 minutes or so remaining, and I have a couple of other key questions I wanted to get to. So I'm going to pivot us. We've been talking a lot about clean energy. And the cool thing is that green banks have a much broader mission than just advancing the energy transition. So climate solutions in general, I think are well positioned to be facilitated through green banks. They could be resiliency investments and otherwise. I'd love to hear from you all what you're seeing and how green banks are essentially using their institutions to advance, beyond just clean energy. Any good examples that you think you could share?
Yeah, so I can share, Chris. So as climate impact intensifies, we are seeing growing demand, not just for clean energy, as you mentioned, but for resilience as well. And in 2023, Montgomery County expanded our mandate for the Green Bank to include physical climate resilience. And that shift allowed us to start treating resilience not as a grant-funded afterthought kind of, but as something that can actually be financed and scaled. So we launched an initiative called Protecting the Path to Net Zero, or PP&Z we call it. You guys can look it up. And the idea is simple. If we are investing in decarbonization, we also need to protect those assets and communities from risk like flooding and extreme heat. One of the biggest challenges is that resilience projects don't fit traditional underwriting. Like the benefits are preventive. You're avoiding future losses rather than generating immediate revenue. And to address that, we launched a pilot. We are developing like a resilience dedicated fund, a low interest revolving loan facility designated to help especially affordable housing owners and in a portfolio to invest in resilience before problems happen. We are blending public, philanthropical, and private capital to make these projects financeable and focusing on integrating resilience like early and not kind of retrofitting later. And the goal is to shift from like reactive spending to proactive investment, kind of reducing long-term risk and stabilizing the cost and improving those outcomes. And importantly, we are tracking the data, which is going to be gold, right? Because avoiding losses, operating savings, and then insurance impact as well. So over time, we can provide the financial value of resilience and unlock much larger pool of capital. And that's really kind of the end goal, making resilience kind of like a standard part of how we finance buildings and kind of not an exception as we used to think about.
I love how you guys are trying to protect the investments that you're making, right? And I often say when we talk about sustainability, it's about reducing impact on the world. When I talk about resilience, it's reducing the world's impact on us is kind of the elementary way that I like to get across. And so that we know we're in a world of a chaotic extreme weather events. We're seeing it left and right, every nook and cranny of this country and the world. And so as we make these investments, we're needing to think differently about the fire hazard, the flood hazard, right? The extreme wind hazards, and how can we use different mechanisms to improve. In Orlando, I remember we enabled PACE financing, property assessed clean energy, and the Florida statute allowed for essentially resilience to be included in PACE as one of the eligible improvements, which I thought was a major step in opening the aperture for homeowners and business owners to kind of start making those investments. But there is a disconnect, I still think, with insurance, and that is that many of these improvements, although being made, aren't leading to a reduction in premium or insurance themselves, even though it is reducing the risk profile of that property. And I think that's where our industry is still maturing and needing to move. And we're spending a lot of time at Climate First Bank thinking about the types of tools that we need to begin incorporating in our credit and underwriting so that we can identify that future potential risk and maybe even help upsell that customer to include these types of sustainability improvements as they buy their new home or as they buy the new, commercial building. That's exactly how we have to start to incorporate this stuff.
And Chris, we in our jurisdiction in Montgomery County, we also we also include resilience in CPACE products as well, and we call it CPACER now because there is an R that stands for the resilience at the end, and that was changed about a couple of years ago to include that.
Sorry about that.
That's okay.
We got a bit of a lag. I was going to move us into advice to help replicate green banks. We have a number of communities across the country that are exploring building similar models, and would love to hear your thoughts and advice for communities that are looking to launch something like this, and from your experience. Hopefully you heard.
I did. Happy to jump in. When Amir, someday you'll give me your answer on the way, and came to learn from you on that as well. But helping communities, cities, states set up green banks is a key part of what the Green Bank 50 does. We have a ton of different tools we can bring to bear. Please connect with us. We're going to share an email address. It's hello@usgreenbanks.org. That'll be in the feeds here in a second. And we can provide founding documentation, model legislation, funding strategies, origination models, technical assistance on underwriting, that sort of thing. But I would say the things to consider as you engage, and particular risks to be mindful of, and words to choose. It's important to understand where the policy community in your locality is, what their priorities are. If they were kind of regardless of the macro climate, policy climate around energy and whatnot. If there's a theme, they want to decarbonize multi-tenant affordable housing. Obviously, orienting yourself there first and foremost is a good strategy. There's also key relationships to build with the local economic development authorities, who, just like the insurers or just like the infrastructure banks, are now in the climate game, whether they acknowledge it or not. What they are doing is directly connected to climate response and climate solutions, and economic development offices bring a ton of different tools for local projects, for local lenders, and community groups trying to engage. So having durable relationships with the economic development specialists in the region is key. And we found that a number of our more sophisticated green banks either administer or advise on tax credits and other grants and incentive programs to help with their own capital deployment as green banks, but also to help the policy community get maximum impact for their scarce public dollars. So cultivating an awareness of the incentives regime, the tax credit regime, engaging with it early in your green bank development exercise. I would say obviously local capital partners are critical to connect with. If it's someone in the network here or a local CDFI or credit union that you could advise, originate for, or even have a balance sheet relationship with, we found that to be really impactful. It does take time to explain what green banks are and how they're different. We've now spent 50 minutes doing it, and hopefully it's a little bit more clear than it was at the beginning. But you have to kind of say the same thing over and over again before it really clicks, particularly with a policymaker who you're asking to establish a new program and maybe capitalize you. You need to cultivate champions inside and outside of policy. You need local groups on your side so that you can credibly claim that when you're capitalized, you can make deals happen at a rate and with a standardization that is meaningfully de-risked and useful for whatever capital you're bringing to bear. And I would say don't ever underestimate the lead times in getting something out of a policymaker. You introduce a bill, you get all the way down the track, and think you're going to get 50 million or 500 million like here in California, and then it just presses pause for 6, 9, 12 months, and you're back in the suit for policymaking. So prepare yourself for that and get some good advice on how to navigate the policy environment, but really anchoring on this is supportive of public policy, this benefits communities and economic development, and it maximizes impact in the climate space for whatever dollar the public put down, we can point to data that says here 510 stack leverage is real. And there's playbooks for this stuff, and we're in the business of sharing it. So please do reach out.
Wow, fantastic, Dan. That was wonderful. Rokas, anything on your end? And Amir, welcome you as well.
Yeah, if I had to give advice to communities looking to launch Green Bank, I'd say focus on three things from day one, and that is a clear mission, real capitalization, and strong partnerships. You need a defined problem you're solving, not just a general idea of doing green projects. You also need patience, flexible capital, because without that, you are just another lender. And most importantly, build partnerships early because green banks don't work in isolation. And the biggest mistake I see is trying to do everything at once or acting like a grant program. Green banks are really about leverage, using limited public dollars to unlock private capital at scale. And if you get that right from the beginning, everything else becomes much easier.
Excellent. Amir, any thoughts on that?
I could not possibly improve upon what Dan and Rokas said.
Honestly, they did. They nailed it. That was amazing. Fantastic feedback. So really appreciate you both. Um, you know, really in closing and just some reflections, I'd love to hear what you all are hopeful about right now. This moment is a bit chaotic. There's certainly a lot of things that are going against us, but there's also incredible spotlights that are moving us in an exciting direction. And if you want to leave our audience with anything that keeps you hopeful about this moment, I'd love to hear it.
Yeah, I think what keeps me hopeful is every time I see a developer, an installer, I talk to a green bank, the project opportunities exceed what I imagine they would be. And it's, I think, a reflection of the fact that the work we're doing is really built upon demand at the community level. So um, it's a powerful thing because when you go to investors, ultimately they want to know that they're going to get a return on their investment. But whether it's purely an economic one or they really see an economic and impact driven one, it really is helpful to know that there is constantly an interest and a demand on the ground. So I see that as the most hopeful thing for me.
Yep. A lot of demand continuing. The funding might have been shrinked at the federal level, but there are dozens of other partners in this space that have different sources, and there's a lot of momentum, especially at the state and local level. Dan, welcome you on kind of what to look forward to and maybe where GB50 is going this year and the next step.
Yeah, I guess it's sort of the macro conditions, not the politics, not the political conditions, but the macro finance conditions and technology conditions are just so clearly on our side that even in a year like 2025, we still see growth in global commitments to clean energy, according to Bloomberg New Energy Finance, still trending up. Uh, every megawatt that's connected to the grid on a global scale, and even in the US, despite it all, has a 95% chance of being a clean tech solution. So, maybe we'll move a percentage point off that, but we're winning, and even more and more, this sort of the headwinds of politics are differentiating. We're seeing signs of interest and support. As we need power on the grid for data centers and electrification. We can deploy, and when the supply chains are rationalizing, shedding some of the fat, frankly, that comes from being a subsidized industry, and we're getting lean to grow. So that's really encouraging to me that we're kind of on the right side technologically and financially. But I also feel really strongly that what's most exciting about this whole space, this green bank space and community clean energy investing, is it's such a tangible thing that people can get behind in the face of a sense of powerlessness and climate despair. What can I do other than get an EV? This is something that operates at the community level, and individuals can see real impact and see their own agency resulting in something different taking place to the benefit of their households, their families, their communities. So there's a tremendous amount of tailwind there, and the green bank community is thriving. If I had a map, I could show you the few states where we don't have a footprint and talk about our plan to make it all covered. And we're going to get there in 2026. I'm confident.
Nice. All 50 states. Here we go. Rokas, any last thoughts as we close out here?
Not much to add to what Dan and Amir said. I look at our pipeline every day, and I mean, it's bigger than it ever was, and we have so much more to do, so much more collaborations to build. So we are definitely very excited in what's ahead.
Same here. Well, this was a fantastic conversation. I think as we close out, I just wanted to thank each one of you. I mean, not only for sharing your expertise today, but the leadership that each one of you show up every day in building and scaling the green banking business model and the community itself. I've been in a lot of rooms over the last year plus, and more often than not, I'm running into at least one, if not all of you in them, and you're in there day in and day out helping to build it up. So thank you. One of the themes that we underscored today, hopefully you all heard, was that green banking is ultimately about partnership. And it's about recognizing that public capital and private capital and philanthropy and government and these mission-driven institutions each play a different but a complementary role in achieving these goals. And when those roles are aligned, we can truly unlock the impact that any single sector could do on its own, as we mentioned earlier, right? At Climate First Bank, we truly believe that where your money sleeps at night really matters, and that banks should and can be a force for good. And so, we at the end of the day, we should be using our deposits and collective money to finance solutions in the world and not continue to perpetuate them. And more often than not, that's what's happening depending on the institution that you're banking with today. So we welcome you to check out our website, learn more about our deposit products, our loan products being offered nationwide. And we'd love to hear about ways that you'd like to collaborate and partner with us as well. So with that, thank you again for spending time with us today. We're grateful to be on this journey together. We look forward to continuing the conversation.
And thank you, Chris, and to the team at Climate First Bank. We really appreciate the opportunity to be here.
Thank you all so much.
Pleasure. Keep up the great work, guys. Thank you.